All right. And if everybody can hear me okay, drop me one in the chat and we will get things underway. Boom. All right. Perfect. Appreciate that. Give me 1 minute here. 1 minute. 1 minute. All right. Let's dive over to trading economics and we will get things underway. Some technical difficulties here. Um, as I'm just going through some things. So I apologize for my delay. But let's head over to trading economics. All right. Uh China consumer prices rise for first time in 5 months. China consumer prices rose 0.1% year on year, June 2025, surpassing the forecast of a flat reading, marked the first increase since January. Non-food costs edged higher, while food prices fell at a softer pace. Meanwhile, producer prices shrank 3.6%, the steepest drop in almost 2 years amid intense price competition, global trade uncertainties, and subdued domestic demand, right? So we got consumer prices on the rise in China, right? Brent crude, talked about it yesterday, was down. Today, Brent crude futures rose above $70 a barrel, reaching more than 2 week high, supported by emerging risks of supply disruptions and downward revision to U.S. production forecast. Uh-oh, right? Making some changes, some revisions to what was previously given. Um, Renewed Houthi attacks on the Red Sea is shipping, raised concerns of supply constraints as the Red Sea inlet remains a key transit route for crude shipments from the Middle East to Europe and Asia. All right. The latest EIA outlook also downgraded U.S. oil production forecast for 2025, citing weaker prices that have prompted producers to scale back drilling activity. However, weighing on the prices were signs of swelling U.S. crude inventories, which bu- 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 and the potential impact of renewed trade tensions. All right, Donald Trump ruled out any extension to the August 1st tariff deadline, stoking concerns over global trade and energy demand. Meanwhile, the API data showed that U.S. crude inventories unexpectedly rose last week, marked the second consecutive weekly build. Okay, so he said there wasn't going to be an extension, but there wasn't going to be an extension past today either. Right. So we'll see how the market overall responds to that as far as oil goes. Um, that did cause some concerns and it pushed oil to the upside. Okay. So we'll take a look at that oil chart just to get an update. We looked at it yesterday. Um, copper. Copper futures in the US were at $5.50 per pound, easing from the record high 5.7 touched earlier in the session, but still hovering 10% higher than Monday's close after President Trump signaled that metal would be tariffed at 50%. All right. So you'll see the EU potentially come back with some retaliatory tariffs, right? But the President said copper will be tariffed shortly after they conclude tariffs on pharmaceuticals, but refrained from giving details on the timing, potential grace periods, and in grades of metal. All right, this drove the premium between the U.S. copper and comparable futures at the LME to 25%, a record high, as foreign benchmarks decline, signaling the end of increasing domestic stockpiles as traders move copper into the U.S. since tariff threats on base metals started in February. Right. Um, so the stockpile is going to start to dwindle. If implemented, the tariff would threaten domestic supply as ore output is relatively low. Refining capacity would be stressed as the country only has two smelters. All right. So bringing everything back into the U.S. However, right, the U.S. is only able to do so much. Only able to do so much. So we'll keep our eyes on this and see how things shift, how things change, um, because the U.S. is only able to do so much, right? So we'll stay posted there on that. All right. So that's copper. Over to the calendar. Da, 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 da. Yesterday, cash rate out of New Zealand came in the same, right? They held rates the same. Today we have Governor Bailey speaking, or Governor Bailey spoke at 6 a.m. We have meeting minutes, right? Crude oil inventories, 10-year bond auction, FOMC meeting minutes, right? Eyes are peeled there to see if we get some additional insight from the Fed on where they are, what they're looking to do, and where they expect things to land. Just some details from that meeting. All right. So we'll keep our eyes peeled on that. Okay. And so not a ton on the fundamental side for me. Benny, good morning, bro.
Ryan, good morning. Good morning, everybody. How are you, Ryan?
I'm doing well, man. How about yourself?
Oh man, doing pretty good. Doing pretty good.
Awesome. Awesome, bro.
Yeah, man.
Fundamentally, what you got top of mind, man?
Come on, man. Trump threatens to impose up to 200% tariff on pharmaceuticals very soon.
Listen, dude. Listen, man. EU is
The-
not happy.
yeah, I know, right? Isn't that crazy? Isn't it
Yeah, man.
crazy? Pharmaceuticals, copper. But I bring it up to say that for the most part, the market has traded right through it,
Yep.
right? Has traded right through it. So that's why I bring it up. Is just it's not having the same impact like it did in the beginning when it created the huge correction back in April. Um, that people are not taking it as serious as it was in the beginning. Like the shock value has worn off, right? So that's why they gave him the nickname Taco, right? Trump always chickens out.
Yeah. Yeah.
So that's the main thing. I wanted to see what the market reaction was going to be. It was a bit subdued the day before, but it seems like this morning with the futures, things seem to be moving right along. So that's all I've been keeping an eye on. So I was looking at it this morning, CNBC, stock futures rise as investors monitor Trump tariff developments. So it's
Yep.
like right now it's like we're just trading right through it, man. You know, no nobody's nobody's overly worried about it anymore. So we'll see how things continue to play out, my man.
See how they
That's it.
shake out, man.
Yeah, that's all I have. But I'm glad because we were aiming at the second half of the year, and you know, it's good to have less volatility, if you could say that, right?
Yeah.
as we look to move through the second half of this year and make some money. Um, I also say I caught this morning quick headline: Starbucks China tracks bids valuing the coffee chain at up to $10 billion. Starbucks China.
Oh,
So
wow.
yeah, so yeah,
Wow.
man, that's pretty big, right? If you're out here, stop watching and following major companies as they make moves internationally. So yeah, and it said they'll remain committed to China and want to retain a meaningful stake in the business. So that's that's big for them as they
Yeah.
as they have a huge international presence. So, but that's it, man. That's it
My man. I appreciate it, bro. Um, let's continue to keep our eyes peeled, man. Keep our eyes peeled on what's happening around the globe. We'll keep our eyes on those meeting minutes, um, and this tariff talk, uh, as he continues just to bounce back and forth
for sure.
on everything. Um, Team, you guys got anything fundamentally that you want to bring to the table?
Nope.
No? No? All right. Cool beans. Let's so we're gonna do, we're gonna take a look at the dollar, we'll take a look at oil, and then I want to uh dive into a new stock that I want us to keep our eyes on as we continue to learn more about this AI infrastructure and the things that are going on in that AI space. So over to the charts. Let's get back here. Take a look at the dollar. We're moving sideways, right? We started to press up a little bit. We talked about yesterday this 80-20 on the 1 hour on the DXY, right? And we just pressed back down, right? So just consolidating here in that 118, 127 zone on the 1 hour. We come back to the daily, right? And we're just sitting sideways right now. Okay. So expecting more movement to the downside, but that could come after retracement. Okay. So we will continue to stay posted there. All right. So that's the DXY on its track to the downside in those ABCD waves. All right. Let's take a look at this natural gas real quick. We looked at it yesterday. Did break that support level, hit the D extension on the one, right? We come back to the daily here and we're pressing down, right? So we could get lower into this 285 area potentially, right? So we're pressing down. Okay, we got this crown action here. So we will see. Looks right now like it might play out, guys. So, and this is on natural gas. Took out that low, right? So we'll see if we get that action to break that support level. But right now we're headed south. All right, headed south. So we'll continue to monitor to see how deep that pushes. I did not look this morning. I was busy this morning. Did not look at what's happening in the natural gas space. Let's see if we can find it though real quick. Natural gas. Let's see. Natural gas futures fell 3.40 per million BTUs after EIA data showed the 11th straight week of above average storage injections. Energy firms added 55 BCF to storage last week, exceeding expectations of 53, um, and well above the 35 BCF added a year earlier. Although the injections were slightly below a 5-year average of 61, the trend reflects robust supply. Meanwhile, hotter mid-July forecasts are expected to drive up air conditioning demand and gas-fired power usage. LNG export activity is also picking up with average flows to the 8 major U.S. LNG plants rising to 15.4 in early July, ending up with up from 14.4. So we got more supply in the market, right? Um, June up from 14 in June. Plants are gradually returning from spring maintenance. So that maintenance, they shut down some of the lines, which causes some um, supply disruptions there. Uh, Golden Pass LNG requests U.S. approval to re-export LNG starting October 1st, signaling the facility is close to startup. All right, that's one of the facilities Joe was talking about, I believe. So yeah, so we're looking short right now, right? Looking short on oil overall. Joy, great job. Drop something in the chat for Joy. She's been holding short since $3.93. Great work there, Joy. And oil is headed to the downside. So we'll look again when we get to that 285 level. Okay. But moving down. Okay. Um, Questions on oil?
Nope.
No more questions. All right. Cool deal. Um, mm, mm, mm. Oil, right? You see, we moved up from yesterday. See, we moved up from yesterday. We actually got a nice little gap here. Boom. That was Monday, right? Pulled back a little bit, and then we pressed back to the upside. Okay, so still pressing to the upside here, right? And there's our sub fib to the downside, but our capital fib on this daily, right? We got that 50% retracement just shy of that 618 level, and we're pushing off that support, right? Past resistance coming future support, and we're pressing to the upside. We do have a stochastic in the sell zone, so don't be surprised if we get a pullback, right? So we'll continue to watch oil, and we'll continue to monitor the situation in the Red Sea in regards to uh, the attacks on ships and things of that nature. Okay. Um, so that is oil. Question, well, let me go down to the four. All right, and that's our look there on the four. We end up taking out the A on that gap down in June, right? And then we've been rising ever since. So that's where this fib comes into play. Boom. B boundary. Give me 1 second, everybody. All right, my bad. But moving to the upside right now on oil. Okay. So that's where we are there. Any questions here before we move on?
Nope.
Can I see your 1 hour?
1 hour, yeah.
Thank you.
You're welcome. So we'll keep our eyes on oil, man. And we will track things as price moves, right? And we'll keep our eyes on the geopolitical situation in the Middle East as well. All right. All right, so we're going to dive into a breakdown presentation of and what I'll actually do is we'll take a look at the chart first this time, and then we will dive into the breakdown of the stock. All right, and the stock we're going to look at today is ASML Holdings. ASML Holdings is a major player in the infrastructure of um, chip technology, right? So I'll go into details of what that means and what that looks like. But um, yeah, I'll go into details of what that looks like. But here we are on the chart, right? Come back to the monthly time frame. Boom. And you see it's been up. Okay. Um, opened in 2003, sideways, right? And as things have taken off from an AI perspective in 2018, 2019, 2020, you see it's been on the rise. All right. Excuse me. So let's get our support resistance in here. Like so. All-time highs. And then we got support there. Or there. Boom. All right. See that nice reversal off that low there after the pullback last year. All right. And you see that reversal in April to the upside. All right. So that's what we got on the monthly time frame. Down on the weekly. Resistance there. Got resistance level there. Nothing there. No new support. We'll keep that support level there on the monthly. All right. So we're good. We're good there. So let's go to the daily. Don't have a swing high there just yet. We'll see how. Actually, no, there will be a swing high. Two candles to the right. Boom. So they got a daily resistance there. So range bound a little bit right here. Okay. Got another support level there. Cool. Right. So range bound, well, range bound, but break and retest. Well, not even range bound, break and retest, right? We had previous resistance here. We broke out of that zone. We came back and we retested. And now we're trying to push to the upside. So that's a break and retest there of that area of of a previous break and retest. All right. So that's where we are on the daily. I'm gonna go back to the weekly and see what the fib looks like coming off the lows here. All right. Boom. Look at that. 8-6 retracement. Beautiful V-shaped recovery, and we're taking off to the upside. Right? Trend line down. Look at that. Boom. Beautiful trend line break. We got stochastic in the cells on the weekly time frame. Okay. So beautiful move to the upside there. Okay. Let's go back down to the daily and see what our daily fib looks like. Look at that. Beautiful 80-20, right? Early 2024. Shallow retracement, 118 127 zone pushed higher into the zone. Breakdown. 8-6 retracement stayed inside that A boundary. Reversal. Beautiful. Beautiful, beautiful. So we could get a pullback, right? We got a stochastic in the sell zone on the weekly. Um, Pressing down into the buy zone on the daily, right? So we could see some movement back down to the downside. Um, Technically. So that's where we are there. Let's go down to the 4. So now we got a deep retracement. We got a trend line break on the higher time frame. So overall, we are looking bullish. Okay. Overall, we're looking bullish. So we will go down to the 4. Okay. Took out the A there. Fibs running to the downside, right? Gives us a deep retracement on that. But overall, we're bullish on the daily and the weekly time frame, right? So run the fib off the low. Boom. Stochastic in the buy zone there. We got an 80-20 here, right? So I'll be surprised if we get a pullback of some sort. Okay. I'm be surprised if we get a pullback of some sort. Would love to see it come back down into our sweet spot. We'll see if we're able to break those daily support levels. But pullback, look for a low price, and then we'll look for a continuation. Okay. Um, so that's back on the weekly. That extension level is here. Boom. Okay. Oops. Do that. So weekly extension there. On the daily, our extension is just a little shorter here. All right. So this is our top side range. Boom. 1023 to 1151 is where we're looking for price to hit right now. We're sitting at 794. Okay. Sitting at 794 right now. So come back down to the 1. So we know we got 80-20 on the 4. We also got an 80-20 on the 1 hour. Okay. So nice deep retracement would bring us down into our zone here. And that is between 671 and 613 is that A boundary, right? So if we get a nice retracement back down into that range on the low side, right, and give us a nice buying opportunity looking long into the thousands over time. All right. So that is ASML on the charts. Any questions here?
Nope.
All right, perfect, perfect.
Ryan, where are you trading it? Darwin or
This one I haven't made any entries on this yet.
okay.
But this one I am looking at taking in my personal account. It is not in Darwin right now. So this will be one that I take. Let me double check. Could be mistaken. Um, yeah, it's not in Darwin, right? It's not in Darwin. So this one I'll be taking in my personal account.
Okay, thanks.
Yep. Out of my brokerage account. But all right. So that's ASML. So what is ASML? That's the key question here, right? Um, and we will break that down. Delete that. All right. So let's break down what ASML is. So I'm gonna stop sharing here. We'll slide over to the presentation. All right. So what is ASML, Ryan? What is it? What is it? What is it? And let's go. All right. Can everybody see my screen?
Yep.
All right, perfect. So ASML Holdings, they are and we'll take a look at it from a Q1 perspective. All right. It's critical to recognize the context of the they play a role in that semiconductor industry, right? Which has significantly experienced shifts. And the performance of ASML, right, a key player in that sector, is indicative of the broader trends that could shape the market landscape in the coming months, right? So when you're listening to a lot of the folks talking about the semiconductor space and what's happening there, they're comparing this to um, the the internet when it was just getting started, or Bitcoin back in 2015 is how people are talking about this AI shift that we have in the semiconductor market in itself. And so, as I've talked about, right, there's different levels to it. And right now, we're in that infrastructure phase where infrastructure is being built, and you have high margin products that are setting the foundation for where this industry goes. All right. And ASML is a key player in that. And so, first quarter, ASML, they've demonstrated robust financial health, um, showcasing extreme resilience in the changes that have occurred throughout the first quarter of the year. Um, and what we're going to do is we're going to highlight some key points that have helped them really sustain and be a key player in this space, as well as upcoming financial reviews. All right. And so, first quarter, they reported sales figures of 7.7 billion euros. Um, this figure it highlights the demand for advanced semiconductor manufacturing equipment, but also reflects the company's strategic positioning in the competitive market, right? Where'd my other note go? Um, one second. And so what they do is uh, trying to find my other note here. Mm-mm-mm-mm-mm. Sorry about that, guys. Um, There we go. So they're an exclusive global supplier of lithograph machines, right? Lithograph machines. What are lithograph machines? Lithograph machines are specialized pieces of equipment used in semiconductor manufacturing, right? To transfer intricate circuit patterns onto the silicone wafers, right? So they're a key piece in making those semiconductor chips, right? So that's what ASML does. Okay. They they supply those lithograph machines, right? And it's indispensable for the production of the sub 10 nanometer chips, right? The super small chips, right? Say 10 nanometers and below, this machine is a key piece in being able to make those, right? Um, and other types of chips as well when you're looking at some of the flying car technology and things like that. And so um, that's what they do. Okay, so when you're looking at the infrastructure, they're the primary player in those machines. And so that's led to their profitability. Okay. And it's positioned them very, very well. And the net income for the company, right? They had sales figures of 7.7 billion. Their net income was 2.4 billion, which underscores the company's operational efficiency and profitability, right? High profit margins, and we'll talk about some of those. And so the level of income is significant, especially considering the investment that's required in this space um, to build, but also for the research and development to maintain their leadership in this type of technology and innovation, right? And so um, moving through, so as we delve into just some deeper analysis of ASML, right? Like I said, 7.7 billion in sales in Q1, right? 2.4 billion in net income in Q1. And so this it indicative of the company's trajectory, right, in this industry. And so this analysis isn't just to highlight their current standing, but also to look at and set the stage for understanding the broader market dynamics that are at play. Okay. And so ASML, they reported crazy sales numbers, right? Blah, 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 blah. And so looking ahead, their full year forecast is 30 to 35 billion, right? In sales. 30 to 35 billion in sales, which is encouraging considering some of the headwinds that we'll talk about, right? It indicates a positive outlook for the company and it's how it's going to navigate through the different market challenges. Okay, so this projection it reflects both the anticipated demand for the technology and the company's capability to meet that demand, which is vital in this industry, but also to continue with the research and development. Okay. Um, the expected margins 51 to 54%, right? So extremely high margins on their technology and their products. So that further reinforces their competitive edge and the competitive advantage in the space, right? These margins they suggest not only a premium product, right, but also strong brand reputation in the market, which is essential for sustaining growth and innovation. Okay, so as we transition to the next aspects of this presentation, we're going to delve deeper into financial overview, and we'll explore these figures in a little bit more detail to uh, to uncover how they fit into the overall strategy and what it means for the company's future. All right. Um, so, right, that technology that we talked about. Okay. um, from a disruptive perspective. All right. We talked about as we build these portfolios, we're looking at it from different market segments and how those segments and how those different segments kind of will help us to build out these portfolios. So um, from perspective of disruption and innovation, it's important to recognize that the landscape of technology that's rapidly evolving here, right? And particularly the role of EUV technology, which EUV technology, oh, my bad. This EUV technology, extreme ultraviolet lithography, right? And it's the the depth in which they go, right? And it's a cutting edge manufacturing process that uses extremely short wavelength light, 13.5 nanometers, right? To create incredibly small and precise patterns in those silicone wafers, right? And so that technology stands out because of not just because of the technological advancement, but also it really sets a foundation for future developments in AI chips and next generation semiconductors. And this EUV technology is critical because it enables the production of the smaller chips. As these chips continue to get smaller, they're going to continue to be able to produce those at a higher level, right? So this capability is essential as we push the boundaries of what technology can achieve, all right, particularly in the field of artificial intelligence where the processing power, right? And we've talked about this, the processing power and the amount of energy that it takes is extremely paramount, right? So as we witness the adoption of this EUV technology in other companies, expanding across various industries, we also have to consider the impact of this growth, right? The increase in use of EUV technology will likely create significant market opportunities, not just for semiconductor manufacturers, but for a range of sectors that rely on advanced computing technology, flying airplanes, flying cars, self-driving flying cars, right? Um, and so looking at the investment side, right? It's noteworthy that a robust research and development expenditure of 1.2 billion in the second quarter indicates strong commitment to fostering innovation in this domain, right? They're investing tons of money in research and development so they can continue to stay ahead in this market, right? And this level of investment is crucial um, because things are changing so fast, right? Things are changing so fast, so they have to really make sure that they're staying competitive in the market, and they're driving long-term growth, especially as things change so rapidly in the space. Okay, so as we move forward, we're going to talk about um, how these innovations are influenced by broader global macro environment and focus on geopolitical tension and market dynamics and how they'll play a role significantly in the future landscape of semiconductor sales. All right. And so um, global macro environment is going to have a significant impact on the operations, right? So as we navigate through the complex dynamics, it's clear that the geopolitical tensions, are reshaping the business landscape. All right. Um, the first point highlights the geopolitical friction affecting sales to China, right? Um, Nearly half to approximately 20%, right? This shift, I'm sorry, reduction in sales in China, right? With the geopolitical friction will impact between half and 20%, right? So there's a range there. Um, and it reflects the current friction, but also indicates a need for the company to pivot, into in their marketing strategy, right? And looking at other markets and how they continue to stay ahead and keep their market share, right? So it's essential to understand that their resilience on their reliance on a single market can pose extreme risks. So they have to make sure that they're diversifying their sales channels, um, and that's going to be crucial for their growth, right? And to meet that $35 billion sales target, right? And so they're seeing revenue being rerouted to allied nations such as Taiwan, Korea, US to continue to keep and Europe, right, to keep that foothold on the market. And so this diversification um, it's a response to the current events, but it's also a strategic move to help build stronger ties with the markets that align more closely with their operational values and long-term goals, right? So they're also playing the political game, making sure that their narrative is in line with the larger scope of things, while still trying to keep a foothold in China. All right. So by redirecting the focus, they're able to enhance their potential stable growth in the face of the geopolitical uncertainty that we have, right? And so with these shifts, there comes some risks, right? Tariffs, licensing changes, supply chain pressures, right, are all factors that they have to carefully navigate. And with them having the market share that they have, they they're almost a monopoly in the market, right, for this particular type of technology. And so as they come into the US and into some of the other countries, they have to keep that in mind as well. All right. And so um each of those elements, right, the tariffs, the licensing changes, supply chain pressures, they add complexity to the operations, right, impacting cost and delivery timelines. And so it's vital that they remain agile and proactive in developing strategies that can mitigate those risks while still capitalizing on the opportunities that are present. All right. And so next, I want to talk about operational efficiency metrics and talk through how these changes in the macro environment are reflecting in the financial performance and the operational strategies. All right. Um, and so operational efficiency metrics is important for us to recognize how these figures reflect current performance and also strategic decisions, all right, that underpin their financial health. So the first point to consider is a gross margin, right? Which 54% is crazy, right? 54% margin is crazy. And so this figure, but it shows their operational efficiency, right? And it's surpassing their guidance expectations. Okay. Strong gross margins not only boost profitability, but also provide flexibility to invest in growth initiatives, even in the turmoil in the market that we have. All right. It's also important to note that there's the significant decrease in net bookings. All right, because of that move out of China. Right. So the net bookings fell from 7.1 billion euros to 3.9 billion euros. Right. So they had a significant drop in purchases. Right. And so it signals that they're facing market challenges because of those geopolitical tensions, right? So as we analyze these factors contributing to this decline, some of those are consumer demand and increased competition, right? Um, and so they have to strategize accordingly based on the region and the momentum, right? And so you have some companies popping up in China that are working on using similar technology, right? And so that brings the competition into the market as those tariffs and some of the supply chain issues continue to arise. All right. And so another critical aspect is their decision to initiate share reinforcement. I'm sorry, refinancing, right, which amounts to 2.7 billion in stock buybacks. right? This move, it demonstrates their commitment to enhancing share value, right? And optimizing their capital structure. Okay. So by reducing the number of outstanding shares, they're not only able to improve the earnings per share, but also they signal confidence in their long-term financial stability, right? And then lastly, the uptick in dividend, right? They pay a dividend of 4.9%, right? And that's a positive indicator for their financial strength, right? So even in light of the recent challenges, the increase reflects their commitment to returning value to their shareholders and maintaining their investors' confidence, right? So great stock price, but also a great dividend return. Okay. So dividend investors that are looking for cash returns, right? This is a great one to take a look at. Great one to take a look at. So we'll transition next into just a data snapshot and key metrics that'll provide us some additional insight into where they are and look at a forecast from a short term. Actually, we'll skip to looking at a forecast in the short term and the long term. All right. Um, and so this, as we look at short term, midterm, and long term performance, um, these are price ranges, and these shouldn't be in euros. They should be in dollars. But price ranges for um, the stock, right? And looking at where price can range. Again, remove the euro and look at it at dollars. And this goes back to our chart, right? And our technical analysis here. So it's vital to recognize the market dynamics that shape these projections um, in understanding where ASML is headed. So short-term stock performance ranging the range looking at is 680 to 740, right? And that's in the short term. And so going back and looking at our chart and where we were looking at, right, 680 to 740, that 680 range is um, a 618, I'm sorry, 50% retracement on the 1 hour fib, right? We looked at that retracement that we may get, right? 680 falls in that range of a 50% retracement to 740, right? So around that B boundary level. Suggesting moderate expectations for the next 1 to 3 months, right? So looking at a retracement potentially coming and price ranging between that, right? This range reflects current market sentiment, influenced by factors such as macroeconomic conditions and investor confidence, right? It's important to keep an eye on the market trends and company news as they can significantly impact the stock's movement, right? So we'll add some of that into our fundamental analysis as we continue to move forward. And so moving into the midterm, looking at a rebound, right? Between 750 and 850, right? 850 puts you at the D extension on the 1 hour. 857 is the D extension on the 1 hour, right? So over the short term, we get a retracement down to the 50, 61, 8 retracement zone on the 1 hour. And then over the midterm, we're looking at midterm being 6 to 12 months. We're looking at D extension being achieved on the 1 hour, right? So we see a more optimistic forecast. And this projection hinges on, right, sustained AI related capital expenditure over the next 6 to 12 months, right? So the growing integration of AI across industries is likely to drive the demand for their advanced semiconductor manufacturing equipment, which is crucial for the production of these cutting edge chips. All right. Um, the annual growth potential of 10 to 15% over the next 2 to 5 years, right? And this indicates a very strong future outlook on this stock, right? The growth rate is impressive, especially in a competitive tech landscape, right? It suggests that they're well positioned to capitalize on the increasing demand for high performance chips, All right. And as these facilities continue to be built out, we're going to continue to have more demand, right? Yeah, we're going to have more competition in the market, right? And we'll take a look at some of those competitors in the future, but it's they're positioned beautifully in this space to continue to sustain their high margins of 50 to 55%, right? And that is their ability to continue to maintain profitability despite the market fluctuations. All right. So this stability is a testament to their operational efficiency and their strong market position, right? And this allows them to navigate the challenges while continuing to deliver value to the stakeholders, right? So even as they drop in net bookings, right? Um, the profit margin is phenomenal and it allows them to navigate that really, really well. Okay. And so next we'll look at just some risk factors that could impact the optimism in the forecast and understand the geopolitical and competitive and operational landscape that's going to be essential for them to continue to excel. All right. And so again, geopolitically, right? Major risks, especially when it comes to the tariffs and the impact on sales, right? And so it's going to help us just understand things that we need to continue to take a look at. Um, because we have this interconnected global economy, right? Changes in trade policy and international relations that definitely lead to unexpected costs or even disruptions in the supply, right? So that geopolitical risk is going to be big. Um, Depending on how this tariff scenario plays out, that could impose that could be imposed on certain goods, right? That could force the company to reassess their pricing strategies and sourcing decisions, right? Where they're getting some of their material from, right? And so next, order of cyclicality and the varied quarterly bookings that create unpredictable value streams, right? Because things currently are cyclical, right? When companies have cash available, when they're looking to spend, that changes quarterly. And so that causes some unpredictability in their revenue. Okay. Um, and it is reflected in the broader market trends as well. And so, but just recognizing these patterns allow for us to better forecast uh, financial performance and make informed decisions on kind of when we could see retracements and when we could see extensions, right? And the next thing is emerging competition and threats of intellectual property theft, right? People are trying to figure out the technology and figure out their intellectual property and copy it. Um, and that's a critical concern for them, right? New players into the market, they may bring innovative technology, right? Or even more aggressive pricing strategies, right? And that could challenge their position in the market, right? With different pricing strategies. And furthermore, they have to safeguard their intellectual property, right? And that's paramount. Any breaches in their security um, could completely undermine their competitive advantage in the market, right? And so when you're looking at other places to invest, right? Um, Security space is major, right? Um, because of the intellectual property. So um, that's going to be huge. It's going to be huge. Okay. Then lastly, they have to consider the execution risk associated with scaling their high adoption and in ensuring their supply chain stability. Okay. Um, they also have to they have to expand their offerings and maintain their quality and reliability, right? As they're looking at execution, supply chain stability, and their offerings overall as more competition comes into the market, right? So they have to continue to make sure that they provide a superior product, right? And any hiccups in their supply chain could disrupt their ability to meet the customer demand. And that could then trickle down and impact their reputation in the market. Okay. So they have to make sure that they're staying on top of all of these pieces as they move through these cycles throughout the year. All right. And so next we're going to take a look at potential allocation strategy, right? If you're looking to add this into your portfolio, what that could look like. Okay. Um, and so depending on how you want to structure your investment, if you're looking to create your own style of ETF for semiconductors, or if you're looking at taking it just an individual stock, right? It's important to understand each component and how they work together to optimize your investment approach in the current market landscape, right? So this strategy here is designed to enhance a portfolio's resilience and capitalization on growth opportunities, right? So the first point is focus on core growth allocation, right? Specifically, recommending an investment of 10 to 15%, right, in semiconductors. Okay, and and this is developing a a infrastructure portfolio. Okay, developing an infrastructure portfolio, having 10 to 15% in semiconductor sector, right? This it will be pivotal in that full allocation strategy, given its role in empowering technological advances across various industries, right? From consumer electronics to automotive. And so there's a great opportunity to build a portfolio of infrastructure across the board in different sectors and allowing this to have a significant portion of that, right? Um, and then as you're looking at that investment, specifically for ASML, having your price range that you're looking to, it's called a collar strategy, right? Looking at a high and low entry range between 650 and 700, right? Price range for the stock. And therefore we can manage our risk, right? And that falls right into our ABCD waves, right? When we go back and look at the chart, falls right into those ABCD waves and that deep retracement, looking for those low prices and the buying opportunities, all right? And so it's important to continue to implement our methodology and our philosophy and looking at the technicals and the fundamentals when um, when analyzing stocks, right? So it's definitely going to help us to continue to navigate the fluctuations in the market where a lot of people see those retracements as surprising or concerning. We look at them with excitement and opportunity, right? And then the last thing is just monitoring um, the Q2 orders, right? And updates regarding US and Dutch licensing. This will provide us with critical insights into the market dynamics and supply chain developments. And so it allows us to make informed decisions based on real-time data and ensuring our strategy remains responsive to the change in the market conditions overall, right? From a fundamental perspective. So that's where we are with ASML technologies, right? And so we want to make sure that we continue to, just align our fundamental analysis with the technical analysis, right? Um, and as we're creating these goals for our investment strategies, making sure that we're being very, very specific in how we make those investments and how we build out those opportunities so that they align with the overall goal. So as Benny and I are looking at the development of ETFs across the board and what that looks like, going to be very strategic in how we put those together to make sure that they align um, with our views and also align with our goals for those particular ETFs. So, ASML Holdings, that's where we are, good people. Questions on this stock um, or anything that I covered there? I know I went through a lot and I know I went over a bit, but coming back to the chart as you guys think about any questions that you might have.
Hey Ryan, is this a defense or a offensive stock?
What do you mean by that?
Like I was some of the readings. It was like is so the balance during the violence. When markets are volatile, is this a stock of defense to have for defense or offense?
No, this is a stock that'll grow your portfolio.
Okay.
This is a stock that'll grow your portfolio for two reasons, right? On the top side, um, over the next 6 to 12 months, we're looking at price getting to 850, right? Over the long term, 3 to 5 years, we're looking at price ranges of 944 to 1023, right? And then potentially higher than that into this 1150 1023 to 1152, right? And that's over the next 3 to 5 years. That's the potential price getting in this range, right? And so that the long-term outlook combined with um the dividend that the company pays, as long as they're able to continue to stay ahead from a research and development perspective, right, and continue to navigate and kind of alter their strategy based on the fundamentals and trade policy, they're going to continue to stay ahead in the game, even as other companies come in to the market, which they have some competitors popping up in China right now. They'll still be able to keep their market share relatively strong to continue to drive price to the upside. And there's not going to be a shortage of business and opportunity in this space, right? So I think this is something that will definitely grow your portfolio, and this will be more of an aggressive play over the long term because there is that volatility there. It'll be important for us to continue just to watch the ABCD waves, right, and look for the low prices to build our position for the stock. Great question. Any other questions or thoughts on infrastructure?
Your research is coming from where?
There's a bunch of places, financial websites, um, their website in itself, Financial Times, Market Watch, um, Stock Circle. So I do a ton of just analysis overall. There's another website called Stock Analysis. Um, that information is pulled from as well. So it's a bunch of websites, including using AI to assist in pulling together some of the data, right? Investing.com. Yep, yep, yep.
It seems like you have a specific structure, so that's why I was asking.
Yeah, and I've as we do the research, and this is something that Benny, we might talk about doing this on a ritual,
Mm.
because Joey asked about just the analysis structure yesterday as well. We chose to look at it from multiple perspectives, right? And looking at the individuals that we follow from an investment perspective, um, kind of taking a broader look at how each of their strategies play into the overall research and their overall investment strategies overall, right? And how they research stocks, how they pull their information, what information they pull, and how they view it and how they integrate it into a specific process. And so what we've done is we've gathered as much information as possible on a list of individuals that we follow from an investment perspective, and we analyze their investment strategies. And we are working to, because this will continue to evolve over time, but what we're looking to do is mold those strategies into something that makes sense for us and something that we can be consistent with from in overall investment research perspective and then an implementation perspective as we build out our individual portfolios and our company portfolio, right? And so we're working to mold all of this information into something consistent that we can follow, just like we follow our technical strategy, right? Our technical methodology. We also want to follow the same type of research and research and development on the research side as we put together the information, right? So we want to have a broader perspective and then be able to bring that down to, okay, how does this directly correlate to what we see on the charts? And so we can make very strategic decisions that are all in alignment with each other from a technical perspective and from a fundamental perspective, looking at all the details on the company and looking at it from a short-term and long-term perspective. So it's evolving. It's evolving, but it's interesting to look at all angles of this next phase of where we're going, um, and pull it all together. So I hope that answered your question. I know I didn't give specifics yet.
Yeah. Thank you.
We're working on it though.
Cool. Appreciate it.
Absolutely. No other questions? No? All right. So keep your eyes on this one, good people, right? And if you see the market going crazy because we got retracements happening, don't be surprised. Don't be surprised, right? And we'll continue to look at these different sectors, and also different parts of the supply chain, right? Because there's so many pieces that go into all of this, right? There's even there's companies that provide cooling elements for these chips. The chips create a lot of heat, and in order for them to function properly, they have to be cooled. So there has to be a company that provides machines to cool the chips, right? So there's so many aspects of the supply chain for us to take a look at and for us to find great opportunities um, to build our investment portfolio. Sorry, somebody was going to say something.
Ryan,
Bro,
not gonna work, man.
I appreciate it, dude.
Who's next, right?
Oh, you
Let's
you breaking up? Say it
on
again.
this research.
You breaking up? Say it again. You're probably driving right now. He's probably driving right now. Um, but and so here's the thing, guys. If you guys have any stocks that you want us to take a look at, things that you want us to dive into from a fundamental perspective, right? And looking at the details of those companies, drop them into the community, right? Or drop them, folks that are watching this on YouTube, drop those into the comments and we can take a look at those, right? And we'll look at them overall and we'll have conversations about what those look like and how you're looking to build your investment portfolio, right? From a stock perspective, how you hedge it with currency, right? That's another thing is as you're building that portfolio, how do you play the hedging game to support if there are, like Joy mentioned, right? If there is volatility in the market, is there a hedging strategy that you can implement to support that as price comes down in some of those investments, right? And so there's tons of aspects to this game that we're just scratching the surface of. And we're super excited about where we're going and the things that are coming through the evolution of the Forex trade room. Um, yeah, shoot them to us, Reese. Shoot them to us. We'll definitely dive in. All right. Benny, you in a better area yet, bro? No, maybe not. So, good people.
My bad,
Questions?
Ryan. Can you hear me?
Yes, we can.
My bad. I'm in a bad spot, man. I know I
You
went
good?
out. Just saying again, phenomenal job, man.
I
Great,
appreciate
great,
it.
great work, man. I definitely look forward to doing a whole lot more of these, in the future, like you say, as we continue to evolve, man. But can't say it enough, man. Phenomenal job.
Appreciate it, bro. Appreciate it, man. All right, good people. Continue to watch the market, continue to research, continue to learn and evolve. Um, Benny Reese said you got Trump mobile too.
I I
uh,
I got the gold phone that came with it.
all right, good people. You all have a phenomenal Wednesday. We're back at it tomorrow morning, 6:30 a.m. Eastern Standard Time with Moss and part of Mr. Ben Allen. We'll talk to you then. Peace.